Hey everybody, it's Jeremy here with the Gillette Group and Local Real Estate. Today we're doing a market update. Some of the data lags as you'd anticipate. Some of it's through January of this year, some of it's through March. I think what you find is the majority of what we're going to cover is actually through Q1 of 2021. We're going to talk about three things in this video. We'll talk about some of the key metrics we track at a national and a local market. We'll talk about the question we get all the time right now. Is this like the last time? Is the bubble about to burst? And then we'll dig in a little more specifically at our local metrics so that we can talk about what's happening here in Southwest Florida. All right, so I'm going to be probably looking occasionally over to my side. I have an extra monitor here. I'm going to pull up some slides and we're going to run through them relatively quickly. So my picture will probably be up in the top corner, but I'm going to make sure I have the slides up so that you guys can see them. Okay, guys, so here we are. Like I said, we're going to talk about the Southwest Florida real estate market update. It's April 2021. Again, this data typically looks back anywhere from a year to a couple of years. And in some cases, I went back as far as 2012 and even 2008 to show us the difference here in these bubbles. So let's dive right into it. I shared with you, we're going to look at some national metrics. We're going to talk about the question we get all the time. Is this like the last time? And of course, we'll talk about what's happening here and why is it so crazy. So let's dive right in. Year over year change in listings. You're going to see this trend on a lot of the slides that we're going to go through. Over here to the left, you can actually see this was the start of COVID. So we're coming out of COVID, early March here. I should say we're going into COVID. Early March, and you can see the decline. That's when nobody knew what to do. They didn't want people walking through their houses. And then we got a little bit of a lift here as we came, basically through the summer months and then into the end of the year. And then our demand has gone crazy again. So that put a lot of pressure on our inventory and it's not catching up. So you can see here, there's just a big decline in the number of listings year over year. So what does that look like from a sales perspective? Well, here's the existing home sales, and you can see kind of that same data. So it was pretty kind of flat, really through 3 or 4 years. And then you can see here when COVID hit, it really kind of dropped down. The same thing with the pending sales. It's a very similar trend where you see the big drop and then the lift again as we get through that. What's interesting is when you look at this data, at the individual price points, you're going to see on the low end of our market, there's actually a decline in sales. And part of that is the appreciation that's occurring. There's just less in our market specifically, but even nationally, you're going to see, these numbers are down. When we look at the upper end, it's really kind of surprising. $1 million and over is actually up year over year, 81%. So there's a ton of activity occurring in our luxury market from the 750 on up. And you can really see across the board, pretty good lift in all the different price points. So this is a composite. It's 20 different cities that get measured across the US, and you can see year over year by month the increases, and you'll see this trend is going to continue. And when we look at our Southwest Florida numbers specifically, you're going to see it's actually quite a big lift. So how does that translate to what we thought? We had actually forecasted that we'd see a year over year increase of 3.2%, and we've seen closer to 10.4% across the country, and you're going to see it's even higher here in Southwest Florida. This is why we're feeling so much pressure. And again, this is a national average, but you can see the months of inventory on hand has really dropped. It's actually under 2 all the way here at January of 2021. And here locally, it's even worse. So over the last couple of years, you can see we've averaged somewhere between 3.8 to 4.6 on the high end. And that's actually, I would say, falsely elevated. These numbers here are as we were coming into COVID. So there's more inventory here because basically real estate sales had kind of halted at that point. Nobody really knew what to do. There were shelter in place pretty much across the country. And then you can see ever since then the decline that has occurred. And again, in February 2.0, 2 months of inventory nationally, and even you'll see quite a bit lower in Southwest Florida. So how does that translate for sellers? Obviously, this is a seller's market, and it is probably the strongest sellers market in history. And the average number of offers on a home was 4.1. That doesn't mean they all came in at once, although here in Southwest Florida, if you're priced right and your house is appealing, you're going to probably have multiple offers in the first few days. Okay, so I wanted to pull this together because this is a question we get asked a lot lately. Is this like the last time? And the last time referring to really about 2008 when we started to see a big dip and a huge amount of default from the mortgage products. So let's look at some of the slides. I think this will give you some information in terms of where we are today versus where we were then. And you can see the annual home appreciation 2002 to 2005 was quite high. So over that 4-year period, we saw over 10% appreciation. From 2017 to 2020, we've averaged 6.3. Now of late, you saw the last slides, it's really climbing quickly now. But over the 4 years, we've seen a much more steady increase across the appreciation. Now, this is pretty compelling. So if you look at the bars in red here, you can see this is new construction. So these were national home builders and builders in general. They were just on a tear. If there was empty land, they were building, anywhere they could, they tried to build. After that dip, let's say, you can see we are far below, and 13 years straight below the 50-year average of the number of units being completed. This is putting tremendous pressure on our real estate market. And nationally, and specifically here in Southwest Florida, all of our builders have basically throttled down. And it's not fun for anybody. They sign a contract and then 8 months later, when you go to move in, they've lost money because the cost of materials has gone up that much in that window of time. So they are trying to gain control of their supply chain, get a better understanding of what their costs are going to be. That's part of the strategy. They also got, as someone I used to work with would say, they got a little out over their skis. There was just too much building going on. There's real pressure on supply. They can't get appliances. The cost of timber, as we talked about, is just skyrocketing. Lead time on windows is 4 to 6 months. They couldn't deliver the product on time. And it's obviously a hardship when you're trying to relocate a family or put your things in storage, find a rental. They were just disappointing too many customers. So they've really now we'll probably even see a dip, I would think, looking at this data if we look another year from now. Okay, this is a big one, guys. So this is the default risk in the mortgage market. And you look back here, and it's kind of funny. I would say if you could fog a mirror in 2004, 2005, not only could you get a mortgage, you could get cash back at closing. So there was a tremendous amount of risk. Basically, anything below this yellow line is reasonable risk. Anything above is not reasonable. We were just, the products that were going out the door were not good for the market. Since then, you can see this is kind of the dip. There's really very little risk in the market. And you're going to see as we get into the next couple of slides why that is. So how does that translate for myself and some investor friends that like to buy rental properties? There aren't any. So when you look at 2012, almost a third of the market was distressed property. Those were your foreclosures, your short sales. Now we're under 1%. So there just isn't that kind of pressure in the market. These things aren't coming, on the market to help stabilize our inventory. And I'm going to show you why here on the next slide. So equity in our homes has just absolutely skyrocketed. Obviously, this relates to people that have a mortgage, but on the average US home, they've seen a $26,000 increase in their equity. The average now on a mortgage home is $204,000 in equity. And this is staggering. 38% of all the homes now in the US are owned free and clear. So there is no mortgage on them, and just a huge increase in equity as you would anticipate because of this. Now, the months of inventory, again, leading up to 2008, you can see it was increasing every single year. And what we're looking at here since 2017 coming into 2021, we've seen a decline. So totally different markets. The builders were just absolutely on a tear with building. And here you can see there's true demand. So it's a much different market than what we saw in 2008. Couple that with, mortgage rates. This is back January of 2020 through today, have been on a pretty healthy decline. And they're even projected, I'm going to show that here on the next slide, they're going to be pretty steady for the next couple of years. So we don't anticipate a lot of pressure or people being priced out because of drastically or quickly increasing mortgage rates. So this is from Freddie Mac. The dark blue here actually shows actual rates. And then when you get into the lighter blue, this is what they're projecting. I don't know how easy this is to see, but by Q4 of 2022, Freddie Mac is thinking we'll be at about 3.2%. You can come all the way back to Q2 of 2020. That's where we were then. So if you think about, that's 2.5 year span basically being down or level. So not anticipating a lot of pressure as it relates to interest rates. Okay, that's our national average. Now I want to show you what is it like in Southwest Florida specifically. So we're going to look at, this is information we pull from our real estate board, Bonita Springs Estero. We could pull it from Naples as well, but it looks nearly identical. So when we talk about new listings, and you saw the national average, tons of pressure, you can see on this graph, there's been a downward trend here for quite some time. And when you look at year over year, so, or at least the 12-month average, we're down 6% single family and down, actually we're up on condos slightly, but this is pretty remarkable. When you look at where we were in March, we were up 19%, but again, that's the anomaly because that's when COVID hit last year. Look here and you'll see the data. I mean, we're down 28%, 28%. Really, it's been since September. I mean, we're down, it's significant. There just isn't a lot of inventory coming to market for new listings. Couple that now with the demand that we just showed on a couple slides back, our pending sales are off the chart. So again, March is a bit of an anomaly because there weren't as many sales last year. It shows us up 143 and 166%. Probably not very, I mean, it's accurate, but it's not realistic, is maybe a better way to say it. But when you look at the trending, it's just absolutely staggering. Really since May, June, and then you really see the lift here starting in July, 61, 77, 81, 91, 61. Anyways, 12-month rolling average on our pending sales, up 47% and 46% respectively. And then you do that against the lower inventory. That's the squeeze that we're feeling here in Southwest Florida. Same thing as you would expect with our closed sales. We're up 30% and 23% year over year. I think we're going to see that trend continue here for quite a while. When we look at our days on market, you would anticipate this because there's less inventory and there's more buyers trying to shop for that same amount of inventory. Our days on market is down. We're averaging about a 20% reduction in days on market time. I can just tell you that as of right now, you will have multiple offers most likely on almost any home you put on the market here in Southwest Florida. And then our median sales price. So, as you'd anticipate, we are seeing appreciation. And what's interesting, and I think it's worth noting on this slide, for a 12-month average, we've seen about an 11% increase in single family and 8% on condos. But this is probably the more compelling data. So we started to see that lift really in July. That's when the buyers came back into the market. Some of the shelter at homes and restrictions for travel were beginning to lift. We saw a pretty steady increase in the single digits. And then in November, we basically doubled. We went from almost 10% in October to 18% in November. And then you can see here 13, 16, 26, 21. I think we're going to see this number lift pretty quickly. In fact, if we look just in our market, this is about right. We're seeing almost a 20% increase. It's between 15 and 20%, depending on some of the communities in our year over year pricing. And this is why we've talked about it a few times here. It's the supply on hand. So if you remember, the national average for inventory was 2 months. And just to set a benchmark for you guys, the average healthy market is closer to 6 months of inventory. We have 0.7 months of inventory in our market. So it is super challenging to schedule a day of showings because, quite frankly, by the time we schedule showings, half of them go pending by the time we hop in the car to actually go out and visit them with you. We don't have the inventory right now. Hopefully sellers will take advantage and bring more properties to the market, but there is just a tremendous squeeze. And the fact that the builders have really slowed down the number of contracts they're willing to write, it has just put further pressure on our markets. So that's the market update, guys. I hope you enjoyed it. I want to make sure that you have the data that can help inform any purchase or sale decision that you make. We may be biased. We think it's hugely important that you work with someone that really knows this market and knows it well. If you have any questions, be sure to reach out to me, 239 771-6237. And again, if this is the kind of information you're looking for, make sure you hit the subscribe button. We're going to do these quarterly. And of course, you've seen we do a lot of other things around lifestyle in Southwest Florida, as well as our neighborhood tours. And if you're thinking about coming to this area, make sure you check out this video, which will help you determine where you want to live in the Estero area.